Meanwhile, Ambassador Extraordinary and Plenipotentiary to the United States for Antigua and Barbuda, Sir Ronald Sanders, says despite the expected fallouts in trade and international relations between the Caribbean and the United Kingdom, which recently voted to leave the European Union, there is expected to be no change in immigration relations between the regions. Sir Ronald also noted that immigration relations with the European Union are unlikely to change.
Immigration from the Caribbean to Britain has long since been tightened up to the point where it is not possible. The cry of Britain against immigrants is not directed at the West Indian community. It's directed at the European Union countries with whom they have had no traditional relationship, particularly from places like Poland. But it is also directed at the steady stream of refugees from the war-ravaged countries of Iran, Iraq, Afghanistan, and now increasingly Africa. But there is no change in the immigration relationship because we don't have one. Neither the European Union countries nor Britain opens its doors to immigrants from the Caribbean.
However, he believes if the UK goes ahead with the withdrawal, there will be changes to its foreign policy which will impact the Caribbean.
They're no longer a European country. They're now a sovereign state entirely on their own. And all of their foreign policy positions, therefore, are going to be linked only to British national interests, not to the interests of any European Union country. So the focus is going to be on what's good for Britain. In the past, it had to be on what's good for the European Union. Now it's going to be entirely on what's good for Britain.
Sir Ronald says these changes will be implemented gradually. However, the impact of Brexit will be felt immediately in other areas, such as the stock markets and tourism.
From the time Britain left the European Union, the value of the British currency declined to a low that it hasn't reached since 1970. So sterling is now trading against the US dollar at $1.32. That means that the cost of holidaying in the Caribbean for tourists from Britain has just gone up almost by 100%. When people have to make holiday choices now, the Caribbean becomes a very expensive destination because whatever our tourism prices were to the British, it's a much higher price today given the exchange rate that has dropped so low for them. We also have a difficulty with our financial institutions that have been holding money, including investments, in sterling. Overnight, the value of that money against our own currencies has dropped. So there would have been foreign exchange losses. Of course, if banks were clever, some of them would have already used sterling to buy US dollars or euros, and therefore they would have had a foreign exchange benefit. But that's also a problem, because if a bank has been investing its money in sterling, but it's paying its depositors in the Caribbean with money that's tied to the US dollar, then the value of those investments have dropped. They have to compensate in some way, and it may cause them to raise interest rates in the Caribbean.